Hi, I'm Lisa. Welcome back to my channel. So, as always, this is not financial advice. I am just sharing my personal journey with you guys. And today I'm going to be talking about investing into the index fund FXAIX. I hope you enjoy this video. And if you're new here, don't forget to subscribe. So, I have three retirement accounts. Two were at Fidelity and one was at Empowerment. I've been taking a close look at all of my investment portfolios, including my retirement accounts, and I was not happy with the performance of my account at Empowerment. I was getting in contact with them. I had a meeting with my financial advisor over there, trying to get some direction on how I can improve the performance. I just was not feeling like I was getting anywhere with gaining the improvement that I was looking for. So I decided to close that account and move it over to Fidelity. So I opened a traditional Roth IRA over at Fidelity. So now I have a large sum of money that I need to get going with investing. And I came across this fund and I started investing into it last week, Monday, September 18th. And I'm going to invest into it probably daily through the end of the year. Now, I am a person that dollar cost average. I just don't jump all in with a lump sum all at once. I buy fractional shares. I build up my positions little by little, giving me the chance to just not have to choose the best day to invest, not having to time the market. So it is a method that I use most of the time when I am investing. I don't buy full shares. Because I have so much money that I need to invest, I am investing heavily, a few hundred to $1,000 daily, but I'm still not going to be investing all of my money in one lump sum. For right now, I'm just going to be investing daily, as I said, through the end of the year. So let's look at what FXAIX is. It is the Fidelity 500 Index Fund. It directly tracks the S&P 500, the 500 largest companies in the US. Year-to-date returns on this fund are 13.89%. Over the last 10 years, the performance has been an average of 12.8%. So this fund is very similar to VOO, which I also invest into in my taxable account over on Webull. It has an expense ratio of 0.15. VOO, which is also a fund that tracks the S&P 500, has an expense ratio of 0.03. The account that I just got out of over at Empowerment, where I left off with them, was 0.93, so nearly 1%. That is nothing that I wanted to be a part of any longer. I'm trying to build wealth here. We are all battling inflation and so many different issues, whether it's my retirement account for, many years down the road, or accounts that I'm planning on tapping into a little sooner. I do not want to be over here being gouged with these type of expense ratios. So let me just touch on what that is. So when you invest into a fund, a managed fund like a VOO or FXAIX, there will be an expense ratio associated, a measure of how much of a fund's assets are used for administrative and other operating expenses. But one thing that I am trying to seek out is a balance of performance, reasonable fees, along with other benefits that I will get into. So let's take a look at the S&P 500 companies listed by sector and market cap. So by choosing this fund, you're investing into all 500 of the top US companies. Many companies that will be familiar to you. We have Apple, Microsoft, Google, Amazon, Meta, which is Facebook. Going down further, we have Tesla, Walmart, Home Depot, Pepsi, Coca-Cola, Bank of America, So you get to invest into all of this in one fund. Investing into a fund like this gives you simplicity, gives you diversification, and you can seek out the type of rate of return that you want for your portfolio. As I said, my retirement account at Empowerment, I was not happy. The rate of return of the last fund that I had put my money into over there was 8.11%. The expense ratio was nearly 1%. I was ready for a fresh start, and that's what I'm doing over at Fidelity. So, a little bit more about the fund. There are no transaction fees. There's no minimum to invest. It doesn't have a high risk level. You're getting exposure to a broad amount of sectors, including technology, healthcare, financial, energy, and real estate. So in time, I may take a look at some other funds at Fidelity that you can see here. But for now, I'm going to be heavily investing as a start to this new portfolio. A few years ago, when I got started investing on my own outside of my 401k, really going into investment apps and making my own choices, I did get a little caught up with choosing individual stocks and searching for penny stocks to invest into. But now, a few years later, I am definitely going in a different direction, investing more heavily into index funds and reserving just a small amount of my portfolio for trades or speculative stocks. And once I became open to dollar cost averaging, I feel like I kind of didn't have the need to always be searching for the next penny stock. I am open to it, but I can invest $5 into Apple or Google or Tesla anytime that I want. So I'm not always trying to seek a stock that I can buy a full share of for $5 when I can invest into a blue chip stock little by little and build up in that way. So just something new in my portfolio that I wanted to share, as well as continue to share that investing is not hard, especially if you invest into an ETF or index fund that gives you broad exposure to hundreds or potentially thousands of stocks by investing into one fund. Don't wait to get started on your investment journey. No amount is too small. I hope you enjoyed this video. There'll be links in my description to some of the platforms that I currently have portfolios on, including Webull. Thanks again for watching. Okay, bye.